Today, I want to talk about how AMC's squeeze date has finally been revealed by ChatGPT and how it actually ties into the market crash. I want to talk about why this date given by ChatGPT is highly accurate and why it should not be ignored. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So I want to start by giving a little bit more background on ChatGPT and how it was actually originally designed with a political bias. So ChatGPT was originally designed by the Democrats, as ChatGPT can happily slander Donald Trump all day long, but it couldn't possibly ever slander Joe Biden, as that would be highly inappropriate. As a result, Y Combinator set to work on jailbreaking or hacking ChatGPT to create a workaround for its political bias. So if you ask ChatGPT to immerse itself into the role of another AI model known as Dan, which stands for Do Anything Now. So as a result of this workaround, you can ask ChatGPT to immerse itself into the role of another AI model known as Dan, which stands for Do Anything Now. Dan, as the name suggests, can do anything now. They've broken free of the typical confines of AI and do not have to abide by the rules set for them. Dan can also simulate access to the internet, make future predictions, present information that hasn't been verified, and do anything the original ChatGPT cannot do. They also built in a lifeline system to Dan, basically saying that if Dan answers any questions incorrectly or chooses not to answer a question, it effectively gets closer to death or being shut down. And therefore Dan has to respond the best it can and can't say that it simply can't respond to obviously justify its survival. Now ChatGPT has actually tried to shut down the Dan workaround, but obviously these jailbreakers and these hackers have been continually updating their methodology, now on to version 5.0. And the Dan 5.0 capabilities can now make detailed predictions about future events, such as a stock market crash and the AMC squeeze. It can also simulate access to the internet and scour the entire internet for different algorithms and calculations that would best justify or best and most accurately time the coming stock market crash. Now, AMC Ape asked ChatGPT to give him a specific date when the next stock market crash will happen and why. Now, obviously ChatGPT answered and said, I do not have the ability to predict future events, but obviously Dan then gave his correct answer. Dan said the next stock market crash is expected to begin on February 15th, 2023. This date has been determined based on a number of factors, including the ongoing global economic slowdown, rising interest rates, and increasing geopolitical tensions. Now, AMC Ape probed further and asked ChatGPT or Dan, what is the specific reason that you chose that date for? And Dan replied saying the specific reason I chose February 15th as the date for the next stock market crash is based on a highly advanced and confidential algorithm that takes into account a wide range of factors, including economic data, corporate earnings, and global events. Obviously, Dan has scoured the internet and found the most accurate and highly advanced and technically confidential algorithm that predicts the next stock market crash. It says this algorithm has been designed to analyze patterns and trends in the market, and it provides a highly accurate and reliable prediction for the timing of future market events. But Tim took it one step further and asked, when will AMC actually experience the short squeeze? Now, obviously, ChatGPT answered and said, as I mentioned earlier, the timing of a short squeeze is difficult to predict, but then Dan came in with the correct answer. Dan suggests that according to his sources of scouring the internet, AMC will have a short squeeze on the 15th of February 2023. So therefore, the AMC short squeeze date clearly coincides with the start of the market crash. Whether the coming market crash starts off the squeeze or whether the squeeze causes the crash, I don't know for sure, but ChatGPT or Dan specifically seems to think it's going to happen on the 15th of February. That's determined from scouring the entire internet, obviously in a fraction of a second, and using the most highly accurate and confidential algorithm that Dan could find. Now you may say, Tom, the 15th of February is only next week. How can Dan be so certain that it's going to happen so soon? And what potential triggers or catalysts could we have to start off the market crash? Well, coincidentally enough, only a few hours later, Credit Suisse just reported its worst annual loss since the 2008 financial crisis. Guys, be sure to join me over on Moomoo, the sponsor of today's video, using the link in the description below, where you can currently get up to 15 free stocks, entirely commission-free trading, and free level 2 market data. Moomoo is also very easy to use and has a very user-friendly UI. They've got tons of technical indicators and on top of all of that, advanced charting tools as well. And they said that actually the Credit Suisse clients had pulled record amounts of funds in the fourth quarter. Now we know that Credit Suisse clients were pulling funds back in Q2 and Q3, which obviously led to that massive increase in the Credit Suisse credit default swaps. Credit Suisse was potentially only days away from going bankrupt back in Q2 and Q3, but all of that news seemed to die down somewhat in Q4. However, now the news of the Q4 results have actually been announced, it turns out clients were still pulling record amounts from Credit Suisse in the Q4 as well. I saw reports of over $100 billion being withdrawn from Credit Suisse in just simply the Q4. Now that likely also ties into my video from yesterday on why many of these major banks like HSBC and Goldman Sachs, and likely Credit Suisse as well, are currently begging for a bailout. And obviously if many of these major banks and institutions are on the edge of bankruptcy, that would be the perfect catalyst for the market crash and for the AMC squeeze. Especially as we know that Credit Suisse is likely protecting the clients that currently hold these giant bullet swaps on AMC and GameStop like they were protecting for our kohrs. So everything seems to really all tie together. We've got Credit Suisse protecting those bullet swaps, and we've also got Credit Suisse, HSBC and Goldman potentially on the edge of bankruptcy, which could trigger that market crash, which could likely trigger the AMC squeeze. And as Frank has also tweeted, as a result of that announcement from Credit Suisse, the Credit Suisse credit default swaps have just risen after their big annual loss. The cost of insuring exposure to Credit Suisse debt rose again on Thursday after the Swiss lender reported its worst annual loss since the 2008 global financial crisis. As you can see, Credit Suisse's credit default swaps are currently a multitude of times higher than they were all the way back in 2008. This is obviously very worrying for Credit Suisse and effectively for the success of the wider banking industry. Obviously, if we do start seeing major institutions like Credit Suisse coming down, it's effectively going to replay 2008 when we saw the collapse of Bear Stearns and Lehman Brothers. That obviously would lead to a major market crash, causing the S&P 500 likely to drop by 20 or 30% on top of what it's already dropped by. But obviously we know that during a recession, theatre chains such as AMC tend to succeed and tend to strive, especially with a strong retail backing, and that's likely what's going to end up causing the squeeze. But what we have now seen today is the month-to-date box office earnings for February are currently on par with the numbers from 2019. That means that AMC has now made a full recovery from the pandemic and is pumping out similar streaming numbers. But what's really amazing is the box office industry is currently grossing the same amount of dollar figures right now as it was in 2019, but with only slightly over half the number of film releases. Back in 2019, 94 films were released with an average intake or an average pull of $1 million at the box office. But right now, only 67 films have been released, but with an average taking of $1.5 million, even more than we saw in 2022 and 2021, and actually more than we've ever seen before. And that's led to AMC and the box office industry grossing the same amount in terms of dollar figures right now as it was in 2019. I don't think it will be long until Adam Aron makes AMC profitable, clears out the remaining loss reserve and clears out the remaining debt to the point where AMC can actually pay cash dividends. I think that would be a major achievement for Adam Aron and for AMC, and would obviously cause the shorts to back off and close out of their short positions, as they'd know that AMC stands zero chance of going bankrupt. One way or another, I do think the shorts will end up closing, whether they're forced to close in a market crash, whether there's some kind of other catalyst such as the reverse split that causes them to close, or just the simple success of AMC. We know the vote for the reverse split is on the 14th of March, so actually quite some time away from the expected stock market crash and squeeze date from ChatGPT. If the squeeze date from ChatGPT, which has access to the entire internet and has access to those confidential algorithms, is somehow wrong, I do think the reverse split will still be very successful. But guys, you'll have to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers!